All right, what's up, Tycoon? Super excited for today's video. We're going to be doing a kind of more of a long-term breakdown of SoFi. This was a viewer request. Okay, they were wanting to know my thoughts of it on the year 2024. And so I'm basically going to give you guys my analysis and where I think it's going to be going and, what to be prepared for in the long term, okay, with SoFi as well as some of the short term. All right. So this is the 4-year weekly chart. I think SoFi has only been trading maybe for about like 3 years publicly, right? And in all of my videos, I've had this purple bearish channel, okay? And I've been going over this. We had a false breakout here to the upside. We had a false breakout here to the downside. All right. And what I've done is I've just duplicated this oval. All right. So, here was our first one. Here's our second one. All right. This may happen again. So if you look on my chart, it says repeat this. I know the chart can be very confusing, but I'm breaking it down for you guys real simply right now. Okay. So, we're looking to see if this oval will happen again. All right. Because it's happened once here, it's happened twice here. And so patterns don't always have to repeat themselves, but the stock market has a tendency to repeat itself, right? So what you can do is you can prepare yourself in that scenario if that is the case, right, to happen. All right, so that's the first thing we're looking at is those ovals, and we're going to look to see if SoFi, because we're pretty much in a bear market in the stock market overall, SoFi definitely is in bear market territory, for sure. When you look at it on the yearly chart, or even here on the weekly, highs of 28. It went as low as 482. It's currently at 750 almost. So, it's been a rough ride for SoFi. All right. But what we've noticed is that it's been trading in this purple bearish channel the entire time. Okay. Now, this channel eventually is going to take us down to zero. Okay. The stock cannot go lower than zero. All right. So what we have to identify is the main levels we need to watch out for. Okay. It's already fallen so much, but if there's going to be more pain in the market overall, that market can spread into SoFi as well. Okay. So you need to be prepared for that. All right. So what I have for you guys drawn up, all right, is the Bollinger Bands. That's what these three things are. That's the only indicator I have on the screen. Everything else is the purple bearish channel. All right, I have these price levels up here. All right, and these were where we were looking to see if we were going to make new all-time highs. Okay, this is going to fill in our next euphoria cycle. What this means is, this it's not going to be in our next bull market. Okay, or our next quick pop. This is going to be the next area of euphoria. And when we last experienced euphoria was the COVID rally. Okay, stocks fell tremendously, and then they rallied. And lots of stocks that were like $3 went up to $60. $8 stocks went up to $80. It was tremendous. So it was a crazy time in the stock market, and that is what's known as a euphoria cycle, right? So these are euphoria cycle highs on top of us pumping trillions of dollars into the economy, right? So you have to realize, like, it's going to be hard for those economic conditions to be met again, where the market's in a complete bull market and it's making new all-time highs constantly, right? And then you have the consumers and retail traders stepping in with all of the stimulus money and things like that, and really boosting a lot of earnings for companies and so on and so forth. So it's you won't see these price levels up from 28.11 to 24.54. Those are my main resistance levels, the main price levels right around there. You won't see those again till the next euphoria cycle. And if we're currently in a bear market overall for the stock market as a whole, not just SoFi, then you're going to be looking possibly anywhere from 6 months to like 2.5, maybe 3 years at most. Could be longer, but you may be looking at it may take until 2024, 2025 for your stock to start recovering, right? And we know that it's already at 750. The lowest it can go is zero. So if we're gonna notice it keep trending in this pattern, right, and following this bearish channel, what we're going to see is a rejection right along this purple trend line here. All right, and that's going to be our major resistance line. And then we're also going to have the middle Bollinger Band. Okay, so Those are two levels of interest for us where we're going to look and, possibly see a rejection, because, it's been a downtrend, right? So you don't want to fight the trend. We're trading in the bottom half of the purple channel. Okay. Here's the bottom, here's the middle, here's the top. We're trading in the bottom half of that. Here's our Bollinger Band right here. We're trading in the lower half of that as well. So, the trend is your friend. There's no reason to fight the trend. Okay. What you don't want to do is you don't want to short it at the bottom of the Bollinger Bands, and you don't want to short it at the bottom of the channel, because those are areas where there's potentially a bounce, right? And those are areas where you can potentially look to go long with call options or maybe stock market price, things like that. Um, and then you would look to sell once we come up closer towards the middle Bollinger Band and the middle of the bearish channel on our weekly chart. Okay. Um, so, the main thing we really need to look out for is if there's going to be another false breakout. Okay. Because, we really can't go below zero. And if I, duplicate these drawings the same way I did here, and we put this oval, look at the levels right here around 632, okay, which is, right around where we found support recently. And if we have a breakout to the downside, it could bring us potentially, as close as down to zero, according to these, right? Now, each one didn't go all the way to the bottom or to the top. They went about, I'd say about 2/3. And, so 2/3 of this would be close to $1, so there's potential that SoFi could go to $2 or below in the next year or two if this, bearish market cycle continues, right? So what you want to do is you want to be prepared for some levels of interest, maybe where you want to, start adding right for the next bull market cycle. All right. So what I have here is neutral territory. And that's going to be basically anywhere from about $5 up to $10. I really don't think that there's much going on in there. I mean, we might trade sideways for a little bit and see, these crazy lows of $5. We may rally up to $10, and then we may fall back down to $5. We really may do that over the next 6 months to year. And if we break below $5, then, we have our bear market territory, and that's going to be, $4 and below. We have $4, $3, $2, $1, all the way down to zero. And if that happens anytime in the near future, right, before 2023, then that would be a breakout, a potential false breakout from this channel. And what you're going to want to do is you're going to want to try to grab a position at these low levels if, that's something that you consider. Okay. This is not financial advice. You'd have to look in. Maybe SoFi is going bankrupt. It could be getting bought out by another company. There's multiple scenarios, right? If you're looking for some price levels to get in at, all right, we're also going to look at the Fibonacci's, all right, and we'll pull those up on the daily chart, okay? And if we look here at our next rally, at our last previous rally, okay, we have our swing lows and our swing highs. All right, here's our low, here's our high. All right, the bearish price target for this when it took us down was hit. Okay, that's the 161.8. That's what you're looking at right there. And then the next one as well, the 261.8 was also hit. That brought us down to $10.08. Okay. And then we have the 423.6, which is all the way down here at $1.06. All right. So if we zoom back out, that may have been a little confusing if you're not too familiar with the fibs, but just understand it's basically a algorithm that traders use that applies to life and the stock market as well, just via the math. All right. So we look here, here's our low, here's our high. We broke those, and then we started to hit these bearish levels all the way down to here. And we have not hit the 423.6 yet, which is all the way down to $1.06. Okay, so that's a potential area where, if we keep going, that's where the Fibonacci extensions and retracements have us going to, right? Is down to here, $1.06. All right, and we'll go ahead and zoom into more of the recent price action future. All right. And so now you guys can understand where that $1.06 level came from. We're going to recreate the same thing. And what we have is our low here and our highs here, because this was a nice rally. Okay. We went from 482 all the way up to 803. It's kind of similar to the same thing we've repeated previously here in the past. All right. And the price levels on this one is going to be 727, 681, 643, 605, 551, 482. All right, because that is our low. And once we break 482, it has it going to 283. Okay, so you have to take into some really hard consideration that if we create new lows on SoFi on the daily chart, or just in general, there's a strong possibility that we're going to head down to $2.83. And if we break that, then there's an even stronger possibility that we're going to hit this price target of $1.06, because that is our previous fib extensions. Okay. Or that we're looked at on the chart. All right. So we have the older one here. All right, with the original lows and the highs, the nice rally. Okay, very similar. We went from, around $19 up to $25. All right. And then we fell dramatically and we hit 15.66, we hit 10.08. All right, based off of the Fibonacci's. And the next level for that one was again down to 106. Well, we're looking here again, and what we're seeing on the most recent rally, okay, from 482 up to 803. Again, that was a very similar rally to the one that we draw the fibs on previously, and we're seeing that price target is taking us down to 283. All right, so below 803, below $8, I would definitely stay away from it if you're looking to purchase, because all signs are leading that we're in bearish momentum. We currently are trading outside of the Fibonacci's, or I'm sorry, outside of the Bollinger Bands. And I'll go ahead and zoom in a little bit so you guys can get a better understanding of that. But what happens is the price action tends to get drawn back inside of the bands, all right, is what we call them when they come out of it. Okay, so if you look here, we exceeded the bottom Bollinger Band, and then we snap back into it, and eventually the stock price comes up and we went to the top Bollinger Band. All right, and now we went out of it, we came and we closed back into it, and we could be heading back down towards the middle Bollinger Band and the 50% retracement on the fibs, or we could be heading back down to the lows of 482 gradually as this continues to just move down and the bottom Bollinger Band lowers as well. Which in that case, all signs would lead that we would at least hit the 283, in the future. So that's the main things to consider. Okay, and that's my main outlook, is that there's no signs of any rush to buy right now in a SoFi. All right, so if you want to go buy, what you can do is you can come here and you can go to trade, and you can go to options, right, and you can go to SoFi and type in SOFI. All right, this is all you got to do, and you can come to July 15th. All right, or let's just do something a month away. Okay, we'll look at the option chain. And let's say that we want to buy SoFi shares under $5, right? Or let's say we think it's going to bounce at this support level here, which is 523. And let's just say we want to buy them at $5. It's at 750. Well, today what we can do, right, is you can come in here and you can sell, you can sell a put contract. All right. So if you sell a put contract, what happens is you will get credited money. All right. Let's change this to 1. And just for the example of this video, so you would get credited $9, right, for the opportunity to buy shares of SoFi if it is $5 or below at the expiration date. Okay. So that would be June 17th, 27 days away. So if you're comfortable within the next month, right? If you're saying, okay, well, hey, I'm setting some money aside next month, I want to purchase SoFi at $5 a share, right? Well, what you can do is you can sell these put contracts and you can gain money. And if SoFi doesn't get below $5, hit $5 or below, then you just get to keep that $10, and then your investment's safe. So you're not really losing any money. Okay, but it's a way to earn a little bit of money on the side. Now, it doesn't seem too great. Like you're saying, like, oh yeah, like just $10. Well, think of it this way. If you have 5 grand, right? And so let's say 100 shares would be $500. Okay. So let's say you have 5 grand and now you can sell 10 of these contracts. Well, now you can make $90 every month, okay, selling 10 of these contracts, and you didn't even have to buy any shares of SoFi. So think of it that way, like, okay, well, hey, now I have $5,090 at the end of June because SoFi went ahead and went to it didn't get below $5, right? It stayed above $5. So I just got to collect all of that premium and keep it. And then if it does fall below $5, well, you got paid $10 for it. So, that's going to lower your average cost of $490 per share, which puts you at 4.90 as a total average cost basis for all of your shares. So it lowers your percentage each time, right? So that's one way to look at it. The only downside is what happens if SoFi happens to go on that false breakout that same month of your expiration date, or the same time that your contract expires, and SoFi drops down to $4 or $3. Well, if you sell this contract, you're legally obligated at the time of expiration to buy those shares at $5, even if it's trading at $2.50 or $3 or $4. So you'll have to pay more. So that's what the main thing is it's really about determining what price are you happy buying SoFi at. And is this the only strategy you want to use, right? Maybe you want to buy in and set a stop loss, minus 5%, minus 10%, or you want to just set some alerts, right? And you just want to accumulate long term over the next year, 2, 3 years, however long it takes for SoFi to recover and have a bull market cycle. Okay, so these are just a couple different ways and options that you can do that. All right. So you can come and you can look, you can be like, all right, well, maybe I want to start 1/10 of my position size right around here at 482. Okay. And then if we come down to 283, I have an alert here at 283. Maybe now I'll put another 1/10 of my position size in, because I'm looking for long term. And I know that there's always downside potential. And you want to at least get some skin in the game, but you don't want to be too invested to where it's going to hurt you and impact you negatively, right? Because there's no rush. So, boom. And now we're at 283 and you've got 20% of your position size in there. And versus, buying all in at $8 and now it's at 283, and, your whole portfolio that you had dedicated towards SoFi is down 70, 60%, right? Well, versus you just having 20% of your overall position invested while you still have 80% cash. So that's the way I want you to look at it if you are trying to buy long term. um, you know, wait to see if it comes down to 482. If we break below 482, there is a strong possibility we're going to hit 2.83. And if, that momentum continues, it could head all the way down to $1.06. All right. But the upside potential is going to be really, really nice in the long term on SoFi. It had all-time highs of 28.26. And so if you can come down here at these levels and you can get it around $5 and you can hold it, till, like, let's say it hits back up to $20 or something like that. I'll go ahead and pull up the bull market cycle chart. Okay. And let's say you get in here at like $4, okay, and you're able to hold it till the next bull market cycle. That's a 250% return if SoFi comes back to $14. Now, is it realistic that SoFi will be back at $14 in the next, 6 months or year? No, but in the next 2 to 5 years, when there's a very nice bull market going on and SoFi is still doing well and they're performing well as a company overall, these are some levels where you're going to see it come to. Okay. And then from there, this is going to be kind of like your noise area. And, it'll be a little undecided. We may head in a straight line up there, or maybe very choppy. But again, this will be the next euphoria cycle, which could happen in the next 5 to 10 years. Okay. Because after a euphoria cycle, then, you have a little bit of a bear market. And then it takes a while to get into a full euphoria moment. Okay. So when it comes to 2024, I think that, if SoFi is still around, I think that it'll be good to start a position, around like $5 or below right now, and wait for it, to enter back into this neutral territory is where I think we can see it in 2024, right? Um, that's honestly my opinion. We could, because we just haven't broken this bearish channel. All right. So, I think we're just going to keep going in that. We may come up to it and, try to have a rally, and we may, hit 11, 12. We may even get to $14, but, we'll get rejected, and then it'll just start to come back down, And maybe 2023 we're still trading in this price level, in this price range between $5 and $10. So that's definitely where I see it for the next 6 months, is between $5 and $10, and below $5. I already gave you guys the fib levels where I think it's going to be heading to. So I'd wait till there. Okay, so set an alert at $5, and then go ahead and keep these fib levels up, and we'll zoom in on them so you guys can actually see them again one more time. It's going to be 283 and 106. All right. If you invest 10% of your position at $5, then that would be like $500 you spent right there. Well, then if you wait till we get to 283 and you spend another $500, you almost get double the amount of shares. Okay. And when you're looking for long-term positions, the more stocks you own, the better. That's going to help your overall position size and, your position in the overall ownership of the company. And, you know, that's when you'll see things really start to pay off. Okay. If you can get 1,000 shares at $2 versus 1,000 shares at $5, it's a really big difference.